Hey guys, it's Nick, and I'm in what looks like some random place in Athens, Greece. You know, just about a week ago, I was at the New York Stock Exchange walking around. Well, here I am at the Athens Stock Exchange in Athens, Greece. And so what am I doing here? I want to talk about the time when the Athens Stock Exchange was shut down and why it shut down, what lessons we could learn in case something similar happens in the US, and what's the likelihood that something like this could happen in the US. So let's talk about it. So I don't know if you know, but on June 27, 2015, the Athens Stock Exchange was shut down because of the debt crisis, and it was shut down for 5 weeks until August 3rd. And what happened was that Greece was expecting an extension of bailout terms. And what happened was, it's pretty complicated, but Greece was going through all these bailouts and they had a coupon due with the IMF, and they were the first ones to default on that payment, which they paid a little bit later. But Greece implemented a whole bunch of capital controls, including shutting down the stock market and not letting people get their money out. Not only that, but they didn't let them put new money into the stock market for a while after it opened. If you look at the GREK ETF, it peaked around $70 in around 2014, and by 2016 it was down about 75% off of its highs, which coincidentally is how much the NASDAQ fell during the internet bubble. When it fell from about a level of about 5,000, it dropped about 75%. So what does this have to do with the US stock market? The US stock market will never shut down, right? Well, it already has, not to the same extent, but it did get shut down during World War II, during a period in the Great Depression, and after 9/11, it shut down for almost a week, from Tuesday until Monday. So there is precedent of that happening. They didn't stop people from selling like Russia is doing now, stopping sellers from selling if they're foreigners. So this is not unprecedented, and it could happen in the future. But the point of this is a few points. One is that there's three kinds of risk in the stock market. One is company risk. So you could buy IBM and they go out of business, but the rest of the stock market is going up. Two is market risk. You could buy IBM, it goes down, market still goes up. Hello.
No photo, no video.
No video of what? The building or the sidewalk or what?
Εδώ ναι, εδώ όχι.
Εδώ ναι,
Ναι.
εδώ όχι.
Εδώ όχι.
So, εδώ ναι.
Ναι.
Okay, ευχαριστώ. Ξέρω.
Ευχαριστώ και εγώ.
Okay. So the woman told me not to film the building because they're still a little sensitive about the shutting down, I guess. I don't know, it's 7 years now. But all kidding aside, you know, security thing, security risk, whatever. But anyway, so you have company risk, you have market risk, meaning you buy IBM, but the whole market tanks, IBM goes with it. And then you have systemic risk, where you buy IBM and everything's fine, but you have the whole market is collapsing, like we saw during the 2009 financial crisis, where John Paulson, the Treasury Secretary, said, if you don't give me $700 billion blank check to do as I please to bail people out, the whole stock market and the whole financial economy is going to collapse. And so that was a real thing.
Απαγορεύεται να τραβάτε με την κάμερα.
Τι?
Απαγορεύεται να τραβάτε με την κάμερα.
No, ξέρω. Αυτή, she told me also, the other security guard. This is okay, this is not okay.
Γυρνάτε από εδώ πέρα, από το κτίριο.
Ναι,
Είστε
ξέρω.
μόνο εσείς φάτσα.
Ναι, the street, ναι. Okay, so that's the second guy who told me don't film the building. But I'm going to go across the street and film the building. You can't stop me over there. So anyway, John Paulson said, hey, there is systemic risk. The whole thing could come crumbling down if I don't get this blank check. So that is a risk. And so the banks were really bad shape, and they went down a whole lot, and a lot of people lost a lot of their money, life savings in some cases. I actually know of some cases like that. So yeah, to give you a quick story, I know of somebody like that, a Greek who was very well educated, a very high-end professional, worked in the US for a number of years, saved up a bunch of money, put his kids through college, all this stuff, came back here, had a lump sum, put it in what he thought was safe dividend-paying bank stocks in the Greek exchange, and he basically lost it all. I think 90, 95, 99%, something along those lines, completely wiped out his life savings. So that can happen. And if you don't believe me, go look at a long-term chart of Citibank. Yes, the same Citibank that Warren Buffett has been buying up. If you look at a chart from 2009, they had a 10-for-1 reverse split, and so they are still down about 90% from where they were before the financial crisis happened. So the point of all this is one, don't assume because you haven't seen something like this happen that it can't happen in the US, but also don't concentrate all your investments into one stock or even into just the stock market. Do other things. Real estate, maybe precious metals, maybe try to start a business, something like that. Don't put all your eggs in one basket, because even though you think you're diversified, if there's systemic risk, then everything goes down. Now, after I just gave you all that doom and gloom about what could happen in the US stock market, let me say one other thing. Tina, there is no alternative. And what that means is, if you say, hey, the US is a risky market, I should diversify into other markets like maybe the Greek market or this other market, the problem is these markets are so tiny compared to the US market. If you look at world stock markets, the total amount of value of the stocks on the index, most other countries are a speck compared to like the US and probably China and maybe, Germany, UK, something like that, Japan. But these other small markets, there's like 160 companies on the Athens Exchange. And so I wouldn't try to diversify into these far-flung little markets, because a lot worse things could happen a lot quicker in markets like this than in the US market. Doesn't mean it can't happen in the US market, but if it does happen in the US market, you could be sure that it's probably happening a lot worse in some of these smaller other markets all over the world. So be aware. I mean, I was here when this thing happened in 2015. I think they also stopped Greeks from taking out more than 60 euros per day out of their bank, and they couldn't transfer money out of the country. They had capital controls, and I remember being here and asking my cousins if they needed me to give them some cash, because as a tourist I was able to take out more money out of the ATM than actual Greeks were. So again, not saying that, hey, get your money out of the banks or stock market or anything like that. Just to say is that things that you don't think could happen, when they do start happening, it happens quick, and it could snowball quickly into a bad situation. So you should be diversified into all kinds of different things. I hope you like this one. I'll see you in the next one. Thanks for watching, guys.